Okay, good morning. Thank you for joining me. So the last working day in January, the welcome last working day of January for many accountants. I'd like to start by thanking the Lewis Brownlee team for all their hard work. They always work hard, and the last 9 months of lockdown has been 10 months. They just all pulled together and worked exceptionally hard. And January, they up it even further to get all of the tax returns done. But it's not just the tax returns. We've got lots of accountants that are out, well, in theory, out on audit, working remotely, obviously, on clients' audits, which makes it so much more challenging. We've got VAT returns due next week, still needing to be done. Management accounts for clients, it's just constant, full-on workflow. And I always say to trainees that are thinking about a career in accountancy, unless you want to be constantly busy and commit to a lifetime of learning, don't be an accountant. It's constant. It's the variety is huge, which is great, and why a lot of us do it. So, but yeah, January in particular is really intense for many. And it'd be interesting to see what happens in a couple of years' time. Making tax digital for income tax is due to start in April 2023. And that will require a quarterly return of if you're a sole trade, or if you've got rental income above £10,000, you'll be doing a quarterly return, not just an annual return. So it'll be interesting to see how that pans out in terms of this January rush. It might be a quarterly rush, which might make things even more challenging all round, but time will tell when the rules come into effect, and we'll see what happens. There has been some bit of good news though this week. HMRC have said that they will not issue penalties for the late filing of self-assessment tax returns, provided they are filed online by the end of February. So we were given an extra month in theory to do tax returns. However, the tax is still due. They still expect the tax payments to be made by Sunday, and any late payments of tax will attract an interest charge. So we didn't take our foot off the gas. We've carried on. There's still a few to get across the line, and we fully intend to get all of them done today. So they'll all be in today. Maybe a couple of hours have to be worked at the weekend to get the final few in by Sunday at the latest. But yeah, we're still pushing to get everything done by end of January, so that clients don't incur unnecessarily any unnecessary interest. And quite frankly, we want to see the back of them. We've got all the things we want to be doing in February. So yeah, the last few couple of days now of getting those tax returns in. What is definitely a deadline today, though, is the third grant of the Self-Employment Income Support Scheme. So if you're self-employed and your average income in the last 3 tax years was less than £50,000 and you have been affected by the coronavirus crisis, you have today to get the grant in, the application for the grant, for the third instalment of that self-employment grant. You don't need to have applied for the first 2 grants, so you might not have wanted to, didn't feel the need, or circumstances meant that you couldn't. You can still apply for the third grant, but you must do that today, and you must do it via your government gateway. So if you haven't already registered for that, you may have left it too late, because that can be quite a challenging thing to get done quickly. Coronavirus Job Retention Scheme. So the furlough scheme, we've talked about this in the last couple of check-ins because it's a hot topic. It's continuing. Again, that's been extended end of April, as we know. It's flexible, so you don't need to full-time furlough your employees. If you've still got a bit of work for them to do, they could just work a day a week or whatever, but it's absolutely crucial that they do not work at the times that you're claiming furlough for. I can't stress that enough. The penalties for an incorrect furlough claim are up to 100% of what you've claimed. So you'd have to pay back what you claimed in error, and the same again if they issued the 100% penalty. So do watch out for that. And we know that it's the HMRC's National Minimum Wage Unit that is going to be in charge of the compliance for furlough claims. And we have had experience of dealing with this particular unit within HMRC. We had a client last year that had a review of their payroll, but from a national minimum wage perspective, so making sure they were paying people the correct basic pay. The unit we found to be very technical in the work that they do, and they do not take a pragmatic view. So they were quite pedantic, I guess, and very challenging to deal with. So the client that had the visit from them last year, it went on for months. It was incredibly stressful for all concerned. The outcome was that the client, I think, had to repay something like £600. So from the perspective of their payroll, it wasn't a significant sum at all. But they wouldn't let it go, HMRC. They kept going and going and going until they were happy that they'd explored absolutely everything. And the amount of manpower, the amount of hours that they put into it for £600 didn't really, it's not very commercial, if you like. They don't look at it from a commercial perspective. And the outcome of £600 we were pleased with, I guess. But the amount of hours it took, the client's hours, our hours, and our fee in dealing with it in the end came to about £9,500. It was a huge amount of work. And that would have been the case even if there were no issues. We have, thankfully for that client, they've signed up for our tax investigation scheme. So what that means, for a small annual fee, in the event of HMRC making an inquiry into any of their returns, our fees in dealing with that are covered, are paid by this scheme. And so, the stress and anxiety of having HMRC come along and ask lots of questions, the unknown about what that might mean in terms of an assessment, plus the additional worry of what are the professional fees going to be, that bit was taken care of because they'd signed up to this scheme. I had a client recently say, but I don't need this tax investigation scheme because I've got you, Lewis Brownlee, are my accountant. They're brilliant. Why would I need this scheme? Why would I need to pay for this? Doesn't matter how good your accountant is, doesn't matter how bad your accountant is, you're still at risk of having HMRC raise queries into any returns that you send in. So it's not about the quality of the tax return, it's just about them asking awkward questions and poking around. And yeah, it can soon rack up to quite a lot if it's a very technical piece of work that they are challenging. So yes, this isn't about you doing your taxes right, it's about protecting yourself from an additional fee should HMRC make any inquiries. So moving on to non-COVID matters, actually, a couple more things to talk about today. Off payroll working, IR35. So that's been around for years and years, in excess of 20 years, I think. And it's changed a little bit over the years, and it changed a couple of years ago. And it's been perceived as being successfully introduced in a new way into the public sector. And April last year, it was going to be rolled out. This new form of IR35 was going to be rolled out into the private sector. That was delayed, but it looks like it's going to come in now from the 6th of April 2021. So it's designed to ensure individuals working like employees, but through their own company, so a personal service company or a PSC or other intermediary, pay broadly the same income tax and national insurance contributions as individuals who are directly employed. So if you're a company providing services to another company, and it's essential, and it's quite technical detail, but essentially it's just you working full time for one other company, this may well affect you. There are other conditions, but that's the main crux of it. So the way those sorts of businesses will pay tax will change from the 6th of April 2021. Usually the scenario is that the client pays the company for for the services. The company pays the director a small salary. The company will pay corporation tax on the profit, and then the retained earnings after corporation tax will be paid to the shareholder, who's a director, and the person that's been working in the company, in the form of a dividend. The director then does a self-assessment tax return each year to declare and pay the tax on that dividend. And that's the bit that's going to change. So HMRC will focus on ensuring compliance with the new rules rather than investigating past arrangements. But if you contract for a medium or large-sized non-public sector organisation from the 6th of April, your client will be responsible for deciding your employment status. So in the past, it was you as the company receiving that payment. You might have needed to apply IR 35 because you'd assessed it yourself that you were caught by those rules. Now the onus moves from you to the person that's paying you. And they should provide you with a status determination statement if the rules apply, setting out and explaining their decision. So if your client determines that your contract is inside the off-payroll working rules, and so you are a deemed employee for tax purposes, then your client will pay your fees, but will be responsible for deducting income tax and national insurance before they pay you. You'll still need to submit a tax return, but you'll get relief for the tax that's already been paid. If you contract for a small non-public sector organisation, your limited company or other intermediary will remain responsible for determining whether your contract is inside the off-payroll rules. So it could have a big impact, and I think the first impact is going to be cash flow. So if you normally invoice your customer £5,000 and they pay you, and you're VAT registered, they'll pay you £5,000 plus VAT. I'm not going to get into the VAT, that's even more complicated, but they'll be paying you less because they'll be taking tax and national insurance from you. So it's something that, yes, if you're going to continue working through the company, it's going to affect you if you have one customer. And we're seeing many medium and large size non-public sector organisations simply classifying all contractors as deemed employees. So that from their perspective, I guess they say, well, it's easier if we just tax everybody as if you're an employee. And that leads on to another, I guess, discussion point. So you'll be taxed as if you were an employee, but will you get the associated benefits of being an employee? So will you get paid holiday pay? Will you get paid pension contributions? Will you get statutory sick pay? So it's quite far-reaching in terms of the impact on this. And if you're a contractor with a single customer, you need to look at the rules and work out how it's going to affect you. Obviously, give us a call, talk to your usual contact in the office, and we can help you work out how best to deal with it. Final thing for today then, moving on, still on the subject of employment though, if you employ people within your business, there are new grants for traineeships that have been announced. So employers can now apply for a £1,000 cash grant to help them take on new trainees. The new scheme, which is available until July of this year, is designed to help businesses with the cost of providing high quality work placements for a trainee. So providing facilities, uniform, helping with travel costs. Businesses offering new traineeship opportunities will receive a £1,000 bonus for every trainee they take on, with up to a maximum of 10 trainees. Employers can claim the cash incentive for any work placements that have been completed since September. So if you've already taken on a trainee since last September, you can claim this £1,000. So that's something to keep an eye out for. And as we have been doing every week, we'll be sending a follow-up email to all the attendees of this webinar with a link to the relevant place in the government website where you can find more details and put that claim in. Just a quick reminder on key dates, as we do at the end of every week. So today is the day for the Self-Employment Income Support Scheme grant deadline. Sunday is the deadline to pay your July and January tax bill, unless you've agreed a payment plan. You can agree a payment plan via your government gateway. If you don't pay by the weekend, they'll start to charge interest. 28th of February is the new self-assessment filing deadline just for this year. I don't think it's a permanent extension. 1st of March, we talked about this last week. I haven't talked about it today, but the 1st of March is the conversion date for the domestic VAT reverse charge for construction services. We'll be doing a specific webinar just on that in the coming weeks. March the 3rd is budget day. So eagerly anticipated or not, we'll see. We're anticipating quite a lot of changes as the government look to recoup some of the cash that they've spent, I guess, in the last year. And then, so this webinar on Wednesday, 5th of March, will focus on any key, well, probably the key headlines of that budget. And then the following week, we will do a more detailed review. For those businesses that deferred their VAT last year, end of March is when that needs to be paid or have agreed a payment plan. If you're still struggling with cash flow and need a bit of help, you've got till the end of March to apply for a bounce back loan or a coronis interruption loan. And then finally, 30th of April, the furlough scheme closes, we believe. I guess that might depend on what happens with lockdown. Time will tell. Anyway, that's it for me from today. Thank you all for attending. If you have any questions, please do send them across in the chat or drop us a call or an email afterwards. We'd be delighted to hear from you. Okay, thank you.